And hello, welcome back to a new video. Today I want to talk about a topic that you probably have not heard about yet before. I have not seen any other trading sites, books, or people talk about this, but I think it's a very important point and it can be the cause of many problems that traders have when it comes to technical analysis. And the topic that I want to talk about is called perspective, or how perspective on our charts and how we view our charts really changes the picture of what the charts and the price action tells us. So we are starting here. This is the US dollar. This is the same time frame across all the three charts that you can see here. So it's basically always the same situation, but in different levels, zoomed in or zoomed out and shown horizontally, vertically. And I just want to raise the awareness that the way you scale charts, the way you look at charts, how you crop them, how much you zoom in and out really shapes the perception of what the charts tell you. So on the top right, it's very much zoomed in. You just barely get a few candles in. That is roughly how people view their charts on mobile. Probably it's more like a top. Like here on the left hand side, that's probably more how people will view their charts on mobile because it's vertically. So what do you see right here? Not too much. This is very hard to make any type of price analysis based on this price action, or based on this little window that we have. You can see price looks like it's in a downtrend here. When we zoom out a little bit, you can see we are here at the bottom of a support level. So the market is maybe already here in an overextended level that we have seen, or an overextended range trending phase. And a trader who only looks at such a time frame or at such a zoomed in chart, he probably will have very wrong ideas about what the chart is doing. He will probably see, okay, the price is here at the bottom right corner of my view area, so probably it's a good time to end the chart or end the trade if I'm short, or even if you're not in a position, many traders will think about going long because, oh wait, it is always a problem that, that's what we generally think, is that when we reach the areas, the extreme areas, be it the bottom right, then we think, okay, the price cannot go lower. We feel that the market is already very low, so we think that, okay, we have to get into a buy trade. On the other hand, once the price reaches the top right corner, then many traders believe, okay, now it's the time for a sell trade. They don't have the perspective. They just believe that, I've seen so often, that once the price action hits the corners and the extremes at the bottom or the top right, traders make a price analysis just based on where the price is in relation to their window, which is of course very, very wrong. So generally speaking, making any analysis on a phone is usually not recommended. Trading cannot be done just on the fly when you're in a subway or when you're waiting in line in McDonald's. You cannot pull out your phone and look at a few candles and think, okay, now it's the time to buy or sell. It sounds romantic, as you can call yourself a trader who makes money from anywhere right out of your pocket, but that's not how it works. You do need more price action, and even if we zoom out a little bit, you can see now we have a different picture. You can see, okay, now it really looks like the market is overextended. We are again here hitting this multiple support areas, so when the price gets here, probably there's a good chance that price is going higher because the market is so low. But what happens here, if we go to the bottom right, you can see we have zoomed out now a lot. You can see, okay, this is now giving us a really different picture. We were in an uptrend here, which came to an end here, or which is coming to an end here probably. We see that the market is here banging into the support multiple times. The price action is here really nice, going into the or pushing into the support, and here there's a lot of room to the downside. So it does look very different from what we have seen here when we zoom in here on a little bit. There's a lot of room actually, and it feels like there is a chance that, or there's a good profit opportunity here to be found if the market breaks lower. So you can see the zoom level really impacts, and it completely influences how we view the markets, whether we perceive a market as high or low, whether we see a chance to buy or sell, and the zoom level is really important. That's why I recommend, for when you are our student, I show it in my weekly reviews, that just zoom out a little bit to get a good picture. I have quite a big screen, so I can get a lot of price action on my chart. So you can see here, when we zoom out, we can get a full picture. That's so important, and I recommend that you do that at the beginning of every trading day at least once. Maybe if you are about to take a trade on a market, zoom out just a little bit, see where you are in the greater picture. Are there any close by support resistance? What is the trend structure like? Where are you in the overall price and the trend phase right now? How does it look? Do you oversee something maybe? And this is a very good starting point, and this is a very important point, so that you don't overlook things in your technical analysis. You have an idea of where you are in the bigger picture, and perspective is really something that you need to pay attention to. This is just a short introduction into perspective, obviously, but it is really a concept that is overlooked, and the way you look at charts, the way you scale them, how you crop them, it really changes what the chart is telling you and how traders make their analysis. So I hope you find this somewhat interesting and helpful. If you did, I'm always happy for a thumbs up. Leave a comment below, and if there are any questions, leave a comment as well. I'm always looking for ideas for new videos. Happy trading, see you soon.